Yesterday, the RBA kept interest rates on hold. To discuss that, the co-founder of Macro Business, Leith Van Onselen's with us. G'day, Leith.
G'day, Stephen. How are you?
Very well. Before we get into interest rates, what do you make about the Coalition's policy about lowering that serviceability buffer on loans?
The Australian Prudential Regulatory Authority probably should have a counter-cyclical buffer so that when interest rates are really low, it maintains a higher buffer. When they're extremely high, probably slightly lower buffer. The only concern I've got, actually new to the Reserve Bank a bit, because it's lowered. Well, what it means is that the Reserve Bank, other things equal, might have to keep rates higher.
Yeah.
The main transmission of monetary policy is through the mortgage market. And if the RBA wants to slow demand with higher interest rates, if you then lower the buffer and allow people to borrow more, and people do borrow more, it might then have to raise interest rates to compensate.
Yeah, okay, yeah, so it swings and roundabouts. Yesterday we saw them keep the rates on hold at 4.1%. Most economists were expecting this. Is this part of a trend, though? I mean, are we likely to see further reduction in interest rates moving forward? And what does this mean for the election, in your view?
Yeah, look, certainly for the election, it basically means that neither side will have an advantage, because they're going to keep interest rates on hold. The next cut, most economists believe the next cut's going to be at the next meeting, and that's in mid-May, and that's actually after the election. Now, the reason why most economists think that the RBA is going to cut is because the data has been quite soft. But apart from that, the board minutes yesterday explicitly said that monetary policy remains restrictive, which is code for saying remains higher than it should be, or higher than neutral. But the reason why the RBA hasn't cut yet is it's basically waiting on the Q1 inflation data, the quarterly inflation data, and that doesn't come out to the end of this month. We also get a few other things like the March labour force survey, and also wage growth data before the next meeting. And those three things, but specifically the Q1 CPI is the thing they'll be looking at. And I think they're just waiting for confirmation that the underlying inflation's falling as they expect, which they sort of suggested yesterday it is, but they just need that confirmation. And economists think that we're going to get a fairly low reading on that underlying inflation of in the Q1 CPI.
You're very big on looking at immigration numbers, and we know that immigration at the moment's too high, and it is having an impact on the housing market, whether we like it or not. Do you think either party is actually doing enough to address that?
Look, not enough in my view, but I'd always like deeper cuts. Certainly, the Coalition's policy is better because they are the only party that is actually offering immigration cuts now. My issue with the Coalition is they only want to cut the permanent side, by the sounds of it. So they've offered to cut the permanent migrant intake by 25%. That's good. But we need overall net overseas migration to fall. And the way you do that is you tighten up standards. So Australia should be going for a smaller intake of higher quality migrants. So, for example, on the student visa side, we should only be accepting excellent, students with very high academic results, with excellent English language standards, all those sorts of things, and that's how you get the numbers down on the temporary side.
Yeah, it's certainly, it's a complex issue. Well, I don't think it is as complex as the politicians make it out to be, as usual. Leith, great to talk to you. We'll catch up again soon.
Yeah, no worries, Steve.